Today's guest is a blockchain vet with almost 10 years of industry experience who went headfirst into crypto back in 2013. A couple months later, in August 2014, he co-founded the Syscoin public blockchain. Present day, he's the CEO of Blockchain Foundry, the world's premier blockchain-based business solution consulting and design firm. I'm very pleased to welcome to the Crypto News Podcast, Dan Wasyluk. Dan, welcome to the show.
Matt, thanks so much for having me.
Very excited to have you on board today. Candidly and full disclosure, I am an investor in the Blockchain Foundry, publicly traded on the Canadian Stock Exchange. Folks, if you are in Canada and have access to a tax-free savings account or a registered retirement savings plan, highly recommend. Dan, that is a great way to kick that off. Why did you guys choose to go public in Canada?
Yeah, so really it was really just a byproduct of how the composition of our team and where everyone was located geographically. Prior to the company coming together, we were really just a decentralized group of developers working on the Syscoin protocol. And as we realized the potential for forming a company to help organizations better leverage blockchain technology, we started to realize kind of where everyone was, and realized the majority of people were in Canada. And then that kind of naturally led to forming the business in Canada just for tax purposes and also just for the reason that that's where most people resided.
Nice. I love that. It's always nice having a couple hopeful to be whales and unicorns on the Canada side. So I love to see that.
And it's interesting because Canada, based on my experience, is also much more open to innovative companies going public. Going public in the United States is a very time-consuming, costly, and arduous process. Whereas going public in Canada, there were, avenues available to us that allowed us to accelerate that process and also do it at a lower cost. And I think that's a big benefit to Canada's innovation ecosystem as a whole, right? Now Canada has a lot of these really innovative blockchain companies doing work on their soil. And the U.S. is missing out on that just because of how difficult they make things for companies like us.
Very well said. The Canadian Stock Exchange, called the CSE, is very welcoming, especially with emerging technologies like blockchain. There's a couple incredible companies, Cypherpunk Holdings, and to name one, you have Blockchain Foundry and many others. But once you graduate, you get to the TSXV, once you pass the 50-cent stock mark, and then once you get to the $5 mark and you become blue chip, then you're on to the TSX with the big
That's
boys
right.
and big gals club. And once you do that, then you get access to the hedge funds, the PE firms, the family houses, so on and so forth. And that's when you can really go to that next level. But shout out Canada, great job on that front. So you are currently the CEO of Blockchain Foundry and also co-founded the Syscoin public blockchain, which has been two incredible investments in two incredible companies. Many people want to know how each of these companies sort of intertwine and what is the synergy between them.
Mm-hmm. Yeah, so it's a good question. We started Syscoin back in 2013, and it really publicly launched in 2014. And the idea there was to enable businesses with a set of predefined hard and smart contracts so that they could easily combine those contracts, kind of like building blocks, and use them in a way that they're very familiar with through a set of standardized REST APIs, and essentially leverage those in different and unique ways to derive value. As we rolled out Syscoin and saw how companies were struggling to leverage the value that was contained within it, we saw an opportunity to essentially develop a business that not only helped those companies to operationalize their blockchain endeavors, but also, take learnings from those consulting engagements where we're helping organizations to operationalize their blockchain vision and spin those off into potential blockchain products. And so, what's really exciting for me is finally this year we're at a point where, we've got a very strong consulting pipeline, consulting as a service is going fantastically. We've just raised some cash, and so now we're in a position where we have some very solid product directions to go in. We're fully funded up to go after those products. We're just sort of stabilizing the consulting division to make sure that can continue to grow and succeed in parallel with us going after product. Right now, all of our product aspirations are very focused on leveraging aspects of what Syscoin brings to the table in conjunction with the larger token ecosystem. So integrating with things like Bitcoin, Ethereum, Matic, and other major platforms that users are leveraging out there.
Can you talk about some of the companies that you've consulted for and the incredible projects that you've helped build with them?
Yeah, it's been a really interesting spectrum of projects. It's not like most industries where, if you're consulting for, farming or something, you're always growing crops. Blockchain technology has such a wide variety of applications and use cases that we've worked with clients ranging from, stable coins all the way through to identity, and then furthermore into the space of like file security and ensuring files aren't modified. So, like an example of one client we work with is Load. They're a very successful silver and gold-backed stablecoin that exists on the Syscoin blockchain. They also have a third token called the Load token. It's actually currently a Hyperledger token, but it may make its way to a public blockchain down the line. We're working with the team to try to enable it on Syscoin. And that's some of what the new notary technology in Syscoin 4.2 helps to deliver. But for Load, what we've developed is a full wallet ecosystem, a series of different sort of token services. So we've developed a gas station for them, which allows users to exchange their stable coins for Syscoin to essentially, cover gas network fees. We've developed a virtual debit card system for them where users are able to remit their silver or gold stable coins, which are AGX and AUX respectively, for dollars, and have those dollars loaded onto a debit card. And then they can use that debit card, of course, anywhere they want out in the world. And then we also developed a method for the Load community to purchase these tokens using credit and debit cards. So now Load has kind of fully comprehensive ecosystem. And really the push that we're working with them on now is additional new features that add more value to that ecosystem and working to get their tokens listed on further exchanges to help enable that community with even more liquidity. Stable coins, that's one use case, a very disparate and different use case, but still in the blockchain space, and something that we've helped an organization with is identity. Decentralized identity or self-sovereign identity is a big area that Blockchain Foundry is involved in. We're one of the founding members of the Decentralized Identity Foundation, which is actually an initiative that was started by Microsoft and has since grown to, there must be over 50 companies in the working group now. If people are interested in what that's all about, please visit identity.foundation and it'll tell you all about it. But basically, decentralized identity, self-sovereign identity is all about putting personally identifiable information back in the hands of users who own that information and giving them better sets of controls through which to expose that information to third parties in ways that did not lead to information leakage, right? And so a really simple example of information leakage is when you go to a bar and you present your ID to the bouncer to show that you're of age to enter the establishment. All that the bouncer needs to know is that you're of age, right? So they only need to know your birth date. But you hold up a card that has your picture, your home address, your sex, your age, your weight, and all of that is now information that's been leaked that is not really necessary for the bouncer to know, but they have that information now. And so decentralized identity is all about creating a technology that allows for you to expose just your birth date to that bouncer in a trusted way so that the bouncer knows that it's valid and is attested to by a government organization who issued that identifier, without leaking those other aspects of your identity, like your address or your eye color or your height, et cetera. And so there's actually, you wouldn't know about this from just kind of the outside of the blockchain space, but from the inside, this is a huge movement. And I think it's something that mainstream users will start to get exposure to within the next 2 to 5 years. We know pilots that are starting within the next 12 months around it that involve, 30 plus organizations. And it's really exciting because the company we worked with in this particular engagement was a major Canadian financial institution. And because of the gravitas an institution of their size has, they've been able to really develop a robust ecosystem around the decentralized identity platform that we help them to build out. And I think that users in Canada will soon start to actually get exposure to that system, and you'll definitely recognize it once it starts getting, marketed through press and stuff. So those are just two, really simple examples of clients we've worked with, but very, very different use cases in terms of how we've leveraged blockchain technology to, provide value to them. In one case, it's stable coins, and you've got hard assets in centralized bank accounts that are now reflected on a blockchain ledger. In another case, you've got a very new type of identity movement, right? Self-sovereign identity, and working to create infrastructure that enables mainstream users and other organizations to leverage that technology.
That was one of the best spiels we've ever had on the pod. Thank you for that. There are probably 100 different avenues I can take that spiel to. A couple of points I want to touch on. Firstly, the bank or the financial institution that you spoke about. Can you divulge who that was?
I'm not at liberty to name them yet. We're trying to hopefully do some more work with them here in the near term, and be able to be a bit more specific with who they are. But at this stage, just due to their size and their goals in the identity space, which are very wide ranging, they are trying to keep a lid on it.
Okay, no problem. Stablecoins, another thing you brought up. Last week, we had the crypto crash of, I guess that would have been May 18th, which, is not really a crypto crash, but in hindsight, it was the largest dip we've had in quite some time. In regards to stablecoins, you had USDC, which I believe hit the 89 cents mark, which in theory should never go, cent or two over or under $1. For those at home, a stablecoin is backed, or USDC and USDT is backed to the US dollar. Therefore, it should always hover around that $1 mark. It's used as a very easy onboarding ramp from fiat to crypto, and has a multitude of other properties and utilities. But in regards to that and what happened last week, can you explain why USDT and USDC really took a hit?
It happened with BUSD too, and I'm not familiar enough with how those tokens are managed by their issuers to really speak intelligently about why they would have dipped below, their stablecoin value. My only, hypothesis would be that there was just so much buying or selling activity happening in the stablecoin space that the price dipped below what it should have been. But I do wonder why the sort of market makers behind those tokens weren't able to hold them closer to their stablecoin value. But without really talking to the issuer themselves, it's hard to really understand why they didn't hold that value.
Good to know. I saw that question a million times on Twitter, and me personally, I didn't know the answer to that either.
And in previous big crypto movements, it's happened as well, where those stable coins have dropped a bit below their stable value. But typically it's in those fast, high volume movements that those kind of let's call them irregularities will come up, and typically they are more of like a blip rather than a dip, last
Right.
I looked, most stuff is back near, the 99 cents dollar mark, and it actually got, looking at like a 1 hour chart, it was back within that range pretty quickly.
Right.
But yeah, it is interesting that it did even dip so low outside of it.
So going back to Blockchain Foundry, if I am an investor, and I already disclosed that I am, if I am an investor in Blockchain Foundry, I guess what I'm asking for is to give me the pitch. But before I ask for the pitch, to my knowledge, you and the team help consult and help these companies create amazing products and services within the blockchain and crypto space. And in return, you receive a chunk of equity in said companies. And then as those companies grow, Blockchain Foundry grows. Is that correct?
That is how we try to structure our consulting agreements. It's not the case that every consulting agreement can fit that structure, but that's how we try to start the conversation.
Gotcha. Okay. If you had 30 seconds to pitch me in an elevator, what would that sound like?
So the pitch is changing because if you had asked me that question, let's say a year ago, it would be very services based and talking about how we can help you realize your blockchain vision. And that still is the case. Blockchain Foundry is still, one of the premier Canadian blockchain consulting and development service providers. And our consulting practice is busier than it's ever been. But really, what we're focusing on this year is products, right? So developing, I would say that Blockchain Foundry is the company developing the pickaxes and shovels in a gold rush, right? Where the gold rush is the rush to buy these tokens or hold whichever tokens you think are going to have the most value in the future. We're trying to build infrastructure that allows for those tokens to be compliant, that allows for those tokens to be easily managed and audited. When you have major companies we deal with this problem ourselves as a public company, but I know lots of other major public companies like PayPal, crypto, Square, et cetera, that have crypto on their books. And all of those organizations need a way to report, right? And so we are very focused on a product direction that is more infrastructural, using blockchain, like providing the tooling that exists in centralized finance to make that whole world go, but developing those same tools for the decentralized finance space. And so you've probably read about some of the innovations that were developed in Syscoin 4.2 Lux, Notary being one of the major ones. And that feature is really all about regulatory compliance. And we have a whole product platform coming that is built on that feature. And it allows for token issuers to develop rule sets for their tokens, whether those be, gamified type rule sets, almost smart contract like functionality, or if they are just simple rules like a blacklist of addresses that cannot interact with their token. All of those rules are stored off chain, and that allows for no incremental costs to either organizations or users when additional rule sets are applied. And it allows for regulators to come into the platform, validate that token issuers are enforcing a certain set of rules, and then validating that various transactions have what sets of rules various transactions have had executed on them. And that type of tooling is really critical for these types of tokens to remain compliant, right? And similarly, we are, like I mentioned, building products that are more geared towards helping companies to account for, crypto on their books. Right now, the process that's used for that is very arduous and non-comprehensive. And the solutions that our products will bring to market will not only make it much more frictionless, but also remove any costs related to validating asset holdings as they pertain to blockchains, and also make the process much more seamless end-to-end between auditors and companies. And so Blockchain Foundry is really a company developing blockchain infrastructure for what we believe will be a future where multiple decentralized systems are used to provide users value that replace today's centralized systems. That's not to say that we're slowing down on consulting or stopping consulting. Our consulting, we've just refined the criteria by which we select clients to consult for, that better align with that product vision and that long-term goal.
Love that. That was a little longer than 30 seconds,
Yeah,
but very well done. No worries. Long elevator. What can you do? CN Tower in Toronto. It's like it's like a 3-minute ride up. Want to just take a quick break to shout out our main sponsor of the Crypto News podcast, and that is a big thank you to our friends at CoinPoker. Folks, you've heard me talk about these guys many times on the pod. I absolutely love them. They are the premier blockchain-based technology platform that was developed by an incredible team of poker lovers and sports gamblers. CoinPoker uses USDT as the stablecoin and main in-game currency, and CHP as in-game fuel. Dan and I spoke about stablecoins. CHP was pretty much a stablecoin during the crash of May 18th, barely lost any of its value and is still kicking strong to this day. Absolutely love to see that. CoinPoker is also incredible in regards to the transactions, super quick, super fast. USDT, Ethereum, Bitcoin, or CHP, all on the platform, and no KYC, which is incredible. One of the best parts. Quick 2-minute sign up, you're up and running, you're dancing, you're off to the races. Huge promotions as they give away thousands in fiat every single week. And again, my favorite part is probably the mobile app. Whenever I'm on the go, I can whip up my phone, play a couple hands of Texas Hold'em, bet on some cheeky sports games. It's playoff season. You have playoff basketball, playoff hockey. You have the Belmont Stakes coming up. You have Champions League. You have Euros in the summer. It is sports heaven season, and the sportsbook app on coinpoker.com is the place to go. That was coinpoker.com. We love you guys. Appreciate you. And folks, please do check them out. They are awesome. And back to the show with Dan. I have so many questions about Syscoin. I know you've touched on it a couple times throughout the first half of this show, but I think a good place to start would be if you could explain sort of the differences between Syscoin and Ethereum, and then if you could also explain the differences between Syscoin and Bitcoin.
Yeah, so Syscoin and Ethereum. So Syscoin is a proof of work blockchain that has a hybrid proof of work, proof of stake sort of setup through a masternode layer, which is used to help accelerate transactions and provide additional services to the network. Currently, Syscoin supports fungible tokens, non-fungible tokens, and fractional non-fungible tokens. Syscoin also has a notary feature, which we recently released and allows for pre-transaction compliance. Currently, Syscoin does not have a Turing-complete Ethereum virtual machine, but we are working on an improved version of an Ethereum virtual machine for later this year, essentially.
Sorry, Dan, can you explain what that is?
Yeah, Ethereum virtual machine is basically like the engine that allows for users to write and execute custom smart contracts, typically written in Solidity. So a lot of what you see on the Ethereum network relative to things like decentralized exchanges, yield farming, staking, decentralized finance in general, all of those things are flash loans, etc. Those are all powered by an Ethereum virtual machine running a smart contract. And so to bring similar capabilities to Syscoin, we are working on our own virtual machine for Syscoin. However, the virtual machine that we're working on for Syscoin is a bit different than the direction that Ethereum is going. We're much more focused on using zero-knowledge proofs for enabling scalability and speed within our virtual machine implementation, whereas last I checked, Ethereum was more focused on optimistic rollups, which have their own benefits, but we believe that the zero-knowledge side of things is going to be not only more secure, but also faster to execute with lower computation costs. So that's a big differentiation in sort of how we're going after the virtual machine model versus how Ethereum is pursuing it. And also Ethereum as a blockchain is an account-based model for keeping track of your token balances. So it's kind of like, almost like a big database where like my address has 1 and your address has 0. And if I send you a token, an ERC20 token, my account goes from 1 to 0 and your account goes from 0 to 1. Syscoin is what's called a UTXO based blockchain. UTXO stands for unspent transaction output. It's actually the exact same way that the Bitcoin blockchain secures and tracks its value. And we actually had previously switched to an accounting model, but then switched back to UTXO because we found not only were there security improvements with UTXO, but UTXO also allowed us to implement some more advanced functionality around the asset layer that Syscoin provides that otherwise would not be possible with just pure account model. And so that's another big feature that was released with Syscoin 4.2. In terms of how Syscoin compares to Bitcoin, Syscoin is probably, more comparable to Bitcoin than Ethereum right now. Syscoin has a token layer like Ethereum has, but again, powered by UTXO rather than account. Like Bitcoin, Syscoin uses UTXO, but Bitcoin does not have a native token model, whereas Syscoin does. Syscoin is proof of work, just like Bitcoin. And what's actually unique about Syscoin is that the way that Syscoin's blockchain is secured is through a process called merged mining, where proof of work created by Bitcoin miners is reused to secure the Syscoin blockchain. So Bitcoin miners have the opportunity to mine Bitcoin and Syscoin at the same time without expending any additional energy and securing both chains. And that approach has led to not only Syscoin's, independent environmental footprint being very minimal because there's not a large ecosystem of miners expending computation power solely on Syscoin, right? They're already expending the computation power on Bitcoin, and we're basically allowing them to recycle that power to help secure Syscoin. And by doing that, we've also enabled Syscoin to become one of the second most secure chain on the planet right now. If you look at, if you look like Coin Wars and sort the blockchains by hash rate, you'll see that Syscoin is the second highest hash rate of any blockchain on Earth right now. And we expect that to continue to grow because that is being driven by Bitcoin miners adopting Syscoin and helping to further secure the Syscoin chain. I think right now Syscoin is running at around something like 18% of global Bitcoin hash rate. That might be a little higher or lower. It fluctuates a little bit. But that results in us, having the second highest hash rate, even higher than that of Ethereum. So that's a little comparison.
That's incredible. Thank you for that. And I learned a ton in that 2-minute spiel there, but how did you guys decide to allow Bitcoin miners to also, make money and make cake off of mining Syscoin and also contributing to the Syscoin hash rate? Like, why isn't this public knowledge? I guess that's a better question. Why isn't this public knowledge? Because I didn't know about this until I did research for the pod.
Yeah, so that's the thing. It is public knowledge, but maybe it's just not well communicated by our team, and we can do a better job of that. But when we started Syscoin, the thinking was, and remember, Syscoin started back in 2014 when you could count the number of blockchains on, your hands, whereas now there's thousands. But we were looking at, the evolving sort of Bitcoin mining landscape. And this was when Bitcoin was just moving from, CPU and graphic card mining to ASICs, right? Application specific integrated chips, which are basically machines that can only mine Bitcoin. That is all they can do. They can't do anything else. And so, there was this arms race for hashing power happening on Bitcoin. And we were, not certain if, we weren't sure what the uptake of Syscoin would look like. And it's really critical when you launch a blockchain to have a diverse network of miners in order to really secure it in a properly decentralized way. If you only have one or two miners, it's really easy for those one or two miners to collude and, do bad things to the network, right? And so we were trying to think of a way to guarantee that Syscoin would have its own, diverse network of miners right out of the gate. And that's where merged mining just, made sense. There were so few blockchains. People who are already mining things like Litecoin and Bitcoin were looking for ways to repurpose that power or make more use of that power, since there was an arms race going on and whatever power they had was quickly being obsolesced, right? And so when we initially launched Syscoin, it was actually first merged mined with Litecoin. It used to be a script-based algorithm coin, and Litecoin uses the script algorithm, and so we were merged mined with them. But then I think around Syscoin 4.0, or it might have been around the 3.0, we switched from Litecoin to Bitcoin because we just saw that, Litecoin is still around and it's a great project and all that, but Bitcoin was really where all of the innovation was happening at a protocol level. Things like Mast and Taproot, which are technologies that are being developed for Bitcoin that will allow it to have greater smart contract capabilities. That kind of stuff was happening in SegWit. Just like all of the innovation was happening in Bitcoin, and Litecoin was just not really innovating and just kind of stagnating, and people are continuing to mine it. And so we switched our blockchain's proof of work algorithm from script to SHA-256 so that we could not only leverage Bitcoin's hash rate that was continuing to grow, thus giving us better security, but also so that we could leverage all of these really innovative features that are coming into Bitcoin that are going to continue to, drive it as one of the top coins in the market, and being able to bring those technologies into Syscoin and leverage them there as well. If we had continued to stay with script, it would have been much more difficult to be bringing in changes from Bitcoin while also keeping up to date on whatever Litecoin and script is doing. And so we decided to just go whole hog with Bitcoin, because, that's where the innovation is happening. And we're very focused on, Syscoin being a leading platform for actual money transfer and value execution. And we saw Bitcoin is doing that too. And so it just made sense to follow Bitcoin. And one also thing that people probably don't know about Syscoin, but is very different than other tokens that follow Bitcoin, is the Syscoin protocol follows the Bitcoin protocol extremely closely. So, each release of Syscoin is up to date, if not just a few code versions behind the latest version of Bitcoin, whereas a lot of these other coins that started from Bitcoin or were influenced by Bitcoin may have taken a snapshot of the Bitcoin code base 2 years ago, 3 years ago, but are not really in the practice of keeping up with Bitcoin. And that's difficult. Bitcoin is doing a lot of very innovative stuff. If you look at how many commits or code changes are going into their code base on a daily basis, it's massive. But our team is really committed to making sure that the technology and innovations available in Bitcoin are one-to-one available in Syscoin, and taking that further through our work with, Notary, NFTs, zero knowledge proofs in the EVM, so that really Syscoin can should be a top coin in the end.
You just brought up NFTs. I know you're a big NFT guy yourself, and Syscoin has the capabilities to launch secure NFTs on the blockchain. I'd love if you could explain sort of the difference of an NFT on Syscoin and an NFT on Ethereum.
Yeah, so an NFT on Syscoin is different than an NFT on Ethereum because, NFTs on Ethereum are driven by smart contracts as well. And so there are few different flavors of NFTs on Ethereum, and there might be more to come. On Syscoin, the concept of NFTs is a bit more defined because we don't have full smart contracting capabilities yet. We've looked at what was happening on Ethereum and the properties of NFTs there that were valuable, and we brought those same properties along with some expanded capabilities over to Syscoin. And we implemented them in such a way that the costs would be significantly lower than what's happening on Ethereum, even at scale, right? And we also tried to make sure that the NFTs would integrate with our notary service, because I'm not sure if you've seen, but there's a lot of discussion happening in the regulatory space around fractionalized NFTs and do those constitute securities or not. And because of the notary technology that we've developed in Syscoin, whether or not those NFTs that are fractional are considered securities or not is somewhat irrelevant, because Blockchain Foundry will be providing products to the market that help for issuers of those fractional NFTs to ensure that they remain compliant by using our products and working with regulators to show them, how those products are being deployed. And so we are really expecting some large regulatory opinions to start being issued, both around stable coins and around NFTs. And we really believe that with the notary technology, we've positioned Syscoin to be, one of the very few options that's going to be available to people to continue operating their offering, like their stable coin or their fractionalized NFT.
Dan, sorry to interrupt. Please go into those changes. Our whole audience is very curious to hear about this.
You mean the regulatory changes?
Yes.
So there's actually in Canada there, but there's a big forum happening tomorrow actually on Canadian regulatory changes that are coming both to the stablecoin space and the NFT space. And so I'm going to hold off on saying anything specific there until I'm sitting in on that work group tomorrow. So I'm going to get more information on kind of what their current thinking is. But essentially, I know that they're looking to enforce greater controls around stable coins beyond just like a simple whitelist and blacklist type thing, which is pretty much what today's version of compliance looks like. And then with fractionalized NFTs, it seems like they might be leaning towards just blanket dubbing those securities. Like if you're doing a fractional NFT, it's a security no matter which way you cut it. If you're doing a normal NFT, then the test, there's like a test for if it's a security. And if that becomes the case, that they say all fractionalized NFTs are securities, then issuers of those fractionalized NFTs are going to need solutions like what Blockchain Foundry is developing in order to continue operating without, any one of various regulatory bodies, SEC, OSC, FINRA, coming down on them and essentially shutting them down.
What does that test look like? Like, what's the quantifying test in regards to, yes, this is a security, or no, this is not a security? So
traditionally it's been the Howey test, but I'm not sure if in respect to NFTs, regulatory, like NFTs and fractionalized NFTs, if these regulatory bodies are, devising like a new test specific for the NFT sort of use case, or if they're just going to be applying the Howey test to NFTs. The way that they're talking about fractionalized NFTs, it certainly seems like they're just running the Howey test on them, and they pretty clearly failed the Howey test, making them a security.
Can you talk about the Howey test?
So the Howey test is a multi-point evaluation framework to determine if an asset is a security. I don't want to go through all the specific points because I don't want to get any of them wrong. But I encourage users to Google Howey test. I think it's HOWEY. And you'll see the list kind of criteria that, is used to, ascertain, to form an opinion on if a token is a utility token or a security token. usually the main points of the Howey test are, is there a promise of potential profit with this token? Is the token exist purely for speculative purposes, or does it serve some actual functional purpose within a system, thus making it a utility token? Like, those are two of the, major criteria from the Howey test, but there are, a handful of additional criteria as well.
Right. Very quickly, last question on NFTs here. What do you think the future of NFTs look like? You've seen a bunch of FUD in the NFT space over the last, couple of weeks, maybe even a month or so. Earlier on this year, they were the hottest things since sliced bread, and then they've cooled down quite a bit. And a lot of people spent a boatload of money on NFTs that have decreased in value quite substantially. Now, what does the future of that look like? Do you have any Dan hot takes or anything of the like?
Yeah, I honestly think the future for NFTs is really bright, to be honest with you. I think that there was, a kind of a hype phase, which is typical with new technologies. But I think that they'll follow a pretty similar sort of technology adoption curve, where there's a pop and there's a bit of a drop. And, I can say that Blockchain Foundry is working on, very serious NFT endeavors, but we're focused more on like the long-term play with NFTs, which we don't necessarily think is just like one-off NFTs that are sold for millions of dollars like once a week. We think that NFTs can become a much more democratized sort of user level thing that can be used to provide digital collectibles to users at an affordable price, but at a much higher volume, and give those digital collectibles some really unique capabilities and integrations, like pulling them into games or providing users discounts or benefits for holding a specific NFT. I also think that there need to be more systems in place for validating the creators of NFTs in order for them to gain more traction. I'm sure you heard about the fake Banksy NFTs that were created, and people spent tens or hundreds of thousands of dollars on just to realize that they're just created by some guy in his basement, not actually Banksy. So I think that, just like the token space or the ICO space of 2017 needed more regulatory guidance and infrastructure in order to evolve and now enable DeFi and all of the great stuff that's happening in that space now. NFTs are in a similar kind of space. I mean, in 2017, we had NFTs, but it was mainly CryptoKitties, and it was kind of a passing fad that people didn't really pay attention to because the focus was really on the ICOs. Now NFTs have gotten a lot more popular. There are new flavors of NFTs on Ethereum, like EIP 11, it's 1155, maybe 1195. I'm sorry if I got the numbers wrong, but there's so many that it's kind of confused sometimes. But now that NFTs are really coming into, the mainstream conversation, I think that there's just a lot more infrastructure that needs to be developed for them, both for holding them, for validating them, and for, shopping for and transferring them. But that's coming along, and Blockchain Foundry is one of the teams helping to build that infrastructure. And I think they have a really bright future. Like when I see these games, both on consoles and on mobile, like Android or iOS, that have these in-game goods you can purchase for, essentially fake currency. And the in-game goods are just completely fake as well. That's where I see a huge opportunity for NFTs. When I'm buying an in-game, sword or something, if that sword becomes an NFT and there's only 15 of them available and they have some special power or something in the game, that it creates a lot more value and engagement than just having an unlimited number of those swords available, and you can only pay for them in the made up currency that the game uses. Now those swords can exist outside of the game. Users can trade them and then use them within their own game, and it takes on a whole nother sort of life of its own beyond what today is very siloed, right, to the game itself and only the game.
Well said there. Dan, this has been a treat. A couple more questions, then we're going to wrap up here. A couple of rapid fire questions. When will Bitcoin hit 100K?
I think Bitcoin hitting 100K is, let's see, we're in May right now. I mean, I think that it's probably going to happen within the first 2 quarters of 2022. I think that, through the rest of this year, we're gonna have some volatility and then be fighting our way back up towards that 100K mark. And I think we'll see Bitcoin breaking it, early next year.
Who's Satoshi?
I honestly, I think that Satoshi was really a group of developers. But I do think that, the name is escaping me right now, but the individual that was working with Craig Wright and who passed away was really the, do you know David Kleinman? That's the name I'm thinking of. I think he was probably, had a major contributing role in the development of Bitcoin, but I don't think he did it by himself. I think he worked with a group of other, cyberpunks kind of thing to develop it. And now that he's passed away, we may never know.
Hal Finney? No Hal Finney?
I think he was part of the group, him and Nick Szabo and some of those other names you hear, suggested as potentially being Satoshi. I think that they, there's proof that a number of them were early miners. And so, they obviously must have had some touch point with the creating body of Bitcoin. Or they were just super likely to stumble upon it in the, very niche forum that it was being discussed in the early 2009 period. But I think it was a group, I don't think it was just an individual.
Dan, this has been incredible. I guess one last question for the newer people, the newbies and the rookies coming to the space. What resources, YouTube channels, blogs, articles, Twitter accounts, where do you recommend new people coming into the crypto space who really want to learn and be a sponge, be that fly on the wall? Where are the best resources for them to learn?
So, for learning, I really think it's a challenge in today's market because there is so much noise, and really sorting out the signal from the noise can be a challenge, particularly when a lot of these journalism outlets are not necessarily always promoting the signal. A lot of times they're promoting noise. And so I always recommend when, people are hearing about either concepts or a specific platform or technology. If it's a specific platform or technology, read the white paper, search for its symbol on Twitter, see what people are saying about it, get in their Discord, get in their Telegram, talk to the developers, see if the developers are anonymous or not, all those kinds of things. If you're getting into a DeFi project, learn about what rug pulls are and how the risks that can be associated with some of those projects. And then when it comes to just like general research and stuff, what I like to do is I like to go to the information sites on these projects that are kind of, they're token projects, right? So if you're looking for information on layer 1 protocols like Polkadot, Syscoin, Ethereum, Matic, those are ones where you just kind of have to watch the crypto news and then dive in. But then once you're focused on a platform, like if you're looking for what's the next great token that, will be launched on Ethereum, what I like to do there is go to, something like Uniswap and look at the tokens list and see what tokens are experiencing lots of liquidity and volume, and then use that as sort of a guide for what tokens to maybe investigate. That's how I discovered Shibe, for example, which is kind of a Dogecoin wannabe. I don't necessarily think there's a lot of huge tech going on there, but it's where I first was exposed to it and then was able to do some, research on it using Twitter and Google, like I mentioned, saw what they were trying to do. And, even though I I don't think ultimately that it's like a tech project. I thought that there was, enough entertainment value in it that people would likely, play with it. And so I made a small investment there, and, that worked out pretty well. So those types of things, are what I would encourage people to think about too. It's like sometimes the right investment is not necessarily technology based, because like it's not like some of these projects are developing earth-shaking technology. Sometimes it's purely a speculative, will people find this entertaining, an incumbent to Dogecoin, which is like become this like Elon Musk's kind of pump and dump coin. I thought that the timing was right for something like that. And, the market kind of indicated that it was. Of course, then you have Vitalik accessing the 5% they airdropped to him, and the team thought he would never touch. And that definitely caused some waves. But, sometimes like, figuring out what to invest in is not always just purely based on technology. Sometimes it's just based on like passing trends that you just got to identify and decide you want to speculate on.
Incredible. I love the humble brag to end it too. Oh, I invested in Shiba Inu and 100x my money. Not a big deal. No, I'm just inferring that. Dan, this has been incredible. I'm going to have to listen to this 2 or 3 times over. I learned an absolute shitload during this pod. And I'm very grateful for that. So thank you very much. Before we let you go, can you please tell our listeners where they can find you on social and online? You, Syscoin, and Blockchain Foundry.
Yeah, no problem. So Blockchain Foundry, you can find at blockchainfoundry.co. You can also find us at blockchainfoundry.com, but we haven't launched our new website yet, so use blockchainfoundry.co for now. Syscoin, syscoin.org has great information there, everything from information about the protocol to different projects using it to how to join the Discord and become more involved with the community. Syscoin also has this unique concept of masternodes. And so if you do happen to accrue 100,000 Syscoin, you can stick those in a masternode and essentially be staking them and be earning, anywhere from 8 to 15% ROI per year on that. So that's another cool thing to be aware of for Syscoin holders. And then for myself, you can find me on Twitter as Blockchain Dan. And then I am on GitHub as Wasyluk, and you can find me on our Discord as Danosphere. And I'm always happy to chat with BCF shareholders, Syscoin token holders, talk about blockchain technology. I'm really a technologist at heart, and so even though I'm CEO of BCF, I'm still all about the technology. And so I love talking with people about it, talking about ideas. And just interacting more with people in the space.
Dan, you're the man. Really appreciate you coming on. This is incredible. I hope you had a blast, and 100% non-negotiable. You will definitely be on for round 2. So get your popcorn ready and stay tuned for that one.
Awesome, Matt. Thank you so much for having me. I had a great time, and I'm looking forward to round 2.
100%. Folks, this was Dan Wasyluk from Blockchain Foundry and Syscoin. I learned a crazy amount during this pod, and I hope you did as well. If you enjoyed this one, please do subscribe. It would mean the world to us. We do launch on Mondays, Wednesdays, and Friday mornings. Every single Monday, Wednesday, and Friday, we got a brand new episode dropping, and we hope you enjoyed this one. I certainly did. Love you all. Appreciate you all. Hope you have a wonderful rest of the day, and we will see you in a couple days. Have a good one. Bye-bye.